free live webinar of SmartFX. All right. Myself, Almas. Now, if you have already attended my webinar, so you should be well versed with my name. All right. Let me just give you a little brief about the company that we are here in the market from last 8 years. Our office is at Business Bay Square. All right. And I am in this industry from last 5 years. Initially, I was working with bank. All right. And finance is what I have done. Now, I've been constantly, it's been 3 months that we have been doing our webinars, and we have educated a lot of people, more than 1,000 people who have learned and who have joined SmartFX. And every time it is, we make sure, and I make sure as well that, we give education to the clients and then make them understand what exactly forex is. All right, so now today, if you have already attended all of my sessions, then this is a great way, a great day, because I'm going to show you all how you can register and how you can have a live account and you can trade. All right, so let's not waste time and bump into our next slide. All right. Um, Also, you can follow us. You can follow SmartFX at Facebook, Twitter, Instagram, LinkedIn, Printers, and our WhatsApp number is also given here. We're also on Telegram. So there are a lot of social channels that you can actually uh, connect with us. And also you can connect with me on my LinkedIn profile, and there's my direct number mentioned. So if you want to connect with me on WhatsApp, please feel free to do that, and I will be glad to answer your query. All right, so let's understand first the basics. So today we whatever theory we have done in our webinar previously, I'm going to collaborate everything and I'm going to talk about it in brief, and we will use that in our trading that we're going to do today. All right, so global market and the surge in popularity. So global market is what is the total economy worldwide that I'm talking about. Surge, this word what indicates is the rise and fall. Rise and fall, it means the up and the down movement that I'm talking about is the surge in popularity. So what does in global economic it indicates? What it indicates is like the movement in the forex market, that is in your currencies, that is in your global indices, that is in your commodities, that is in your future contracts. So when I say forex includes all these segments. Forex exchange itself includes currency, which I told you in the last session. It includes different kind of currencies from different countries. That is, the popular ones are the USD, Euro, GBP, JPY. So there are almost around 8 major currencies that are popular. Then we have indices. Now, indices is what? It is a mixture of all the stocks, okay? The best stocks that we talk about, and that is how it is created. Commodities is gold, silver, crude oil that is traded on a CFD platform. And also there are future contracts, that are treasury bonds, index future, and etc. However, our focus would be on forex exchange, indices, and commodities. All right. Now, all these products, okay, are often traded on OTC. OTC means what? Now, OTC means it refers to over-the-counter markets. Now, over-the-counter market means where the securities trades that are not listed on the major exchanges like US. On the US side, it is not on the US exchange. These are the securities which are not listed, and they are traded via broker or a dealer network. Okay, but usually all the small companies do not are the ones who are not listed on a formal exchange. Those are the smaller companies. So these kind of companies you are also there on CFD. So what is it exactly? So In OTC forex trading is said that we are directly linked to the market, to the exchange, and we are trading, but it is actually the CFDs. When I say CFDs, understand the CFD is the contract for difference. So when you are using a platform for trading, what you're doing is like it's in the form of CFD. So whatever you buy and sell and the difference is there is what you're going to get. Okay. Now we have all gone through the pandemic COVID situations, and there is a time that people realized it, that when uncertainty, like never ever we thought about that COVID is something that's going to hit and we are going to have a crisis. Recessions, okay, people understand. Inflation is understandable, but something like that was not acceptable. However, when this time came, people actually understood the fact that you should have a passive income. And at that point of time, trust me, there was this part when forex itself was very popular, very very popular, because of the flexibility, because of the internet, because of the liquidity, because of the execution. What you need is just your internet connection, and you'll be anywhere and you can trade. And that is how it got, it got more popular, and people was like, this is where I can earn. Now again, a profit and loss is both part of your trading market, but yes, when you do a proper risk management, there are high chances that you can make money and not lose money by a proper risk management. All right. So I've mentioned the reason here, why during pandemic it was so popular. As said that the firstly on CFDs, the trading market hours is 24 hours. So at any point of time, 5 days a week, you can actually trade in this market. Secondly, the ability to exploit the opportunities from both a rising and falling market. So it is not only the appreciation part that you think, like let's say if you invest money in real estate, you will not wait for the property to go down and then sell it at a loss. You will always think that it rises above, it goes up, and then once the value for it appreciate, then only you will sell it and take the profit out of it. However, with forex market or in trading business, what happens is like it works both the way, when the market is rising as well as when the market is falling. Also, now if you want to buy a house, you need a big amount of money. If you want to invest in real estate or in any kind of business, you need an initial money that to invest in. However, with trading market or forex market, your capital requirement is low because you have a facility of leverage. Okay. Now, better liquidity compared to equity share markets. All right. Leading to faster execution speed, as said that it can be done anywhere at any point of time, because the market, the beauty of it is that the market is open for 24 hours. Insider market and market manipulation is kept to minimum considering the scale of the market globally. Also, if there is a lot of opportunity when you are trading in the market. If you're already a trader, if you're a scalper, every minute, every second, there's an opportunity if you have a proper risk management done. Now, what is Forex? Forex is basically a short form for forex exchange. All right. It's a largest and the most liquid market in the world. All right. Now, in 2008 and 2009, the daily transaction that used to happen in Forex market, okay, it was 1.9 trillion USD. But today, 2022, this estimated daily transactions amount is more than 6 trillion USD. Yes, 6 trillion USD. So that is more than 100 times the largest, and it is traded stock market in the world. Then the New York Stock Exchange. All right. Now, foreign exchange market as a whole consists of physical transaction as digital transaction, which without leverage through bank transfers, physical currency exchange, options, and forex CFDs. Now, what are we going to talk about is forex CFDs, because we are brokers and this is what we deal with. Now, what is referred by most of the traders in forex market are the CFD based transactions. So as I told you, what is CFD transaction? It is the contract for difference, that whatever the buying and the selling difference is, there is the one going to be paid. Now, SmartFX, we offers currency pairs, all right, which are widely traded, with leverage through CFDs. Okay, so at SmartFX we do that. We also trade in commodities. Now, commodities, there again, it has been categorized. All right. Commodities is a market where it refers to raw products traded or the primary product that is traded. Now, when you say about hard commodities, it includes metals, that is gold, silver, copper. And the prices for this, how do you get it is as per the manufactured price. Soft commodities includes wheat, coffee, cotton, and their prices as per the seasonal, because you never know, probably in winter it would be there, or it will summers it won't be there. So the prices for these kind of commodities, soft commodities, is indicated through weather. Now, SmartFX offers what commodities? It offers US oil, UK oil, gold, silver, and it can be traded through CFDs. Thirdly, it is the equity index. Now, what is equity index in a very simple and a lay language? It is an accumulation of stocks that can be bought through indices. All right. Now, what the traders have an options is like you don't have to individually track a stock. So let's say, for example, if you want to buy Apple, you will have to keep a track on Apple. If you want to buy Google, you will have to go and check the Google stock and do it. If you want to go and check Tesla, you will have to check the Tesla stock. However, what you do is like there's a compile of the stocks of the major um, 30 or 500, okay, depending on what index you are looking at. You can choose that index and you can uh, trade in those index. Okay, now SmartFX has major indices as Dow Jones 30, we have Nasdaq, we have Australian 200, and Nikkei 225, that is the Japan index. All right. Now, what is the advantage of CFD instruments is that the market, as I said, it's open for 24 hours. Traders can choose your own trading hours. So like say if you're a working person and you are working from 9 to 5 or 10 to 6, and if you are able to and if you want to do this as a passive income, or if you are interested in this business, you can actually give time in the evening. All right. You can have your own style, and you can have your own technical analysis, and you can do your own study, and you can trade it. So you can have your own style to trade. Like this is unlike like share market. So if you're an Indian, so from 9 to 3:30 the Bombay Stock Exchange is open. No, but here in CFD the market is open for 24 hours, and CFD traders can find opportunity, as said, in both buying and selling market. All right. And I've also said that leverage option is already given by the broker. So your initial investment is not much. But yes, as said that, if you are a newbie to the market, it is better that you use leverage by managing your risk. All right. Now people think that that forex is something new. If you are a newbie to the industry, you'd say, oh, forex is something that is not good, or it is very new, or I'm not a finance student, or I've not done my economics or this and I cannot understand. No, forex is not a new instrument. Forex is the oldest form of the market. Okay, initially, how do human used to trade? We used to exchange things. There was a barter system. All right. Instead of barter, now what do? We trade. That's a modern word. That's instead of barter, it's a trade. So when we did barter, it was an exchange that we did. So forex itself is a very old concept. It is nothing new. But in modern times, what we is using, like we are not trading against like initial days. You give me onion and I will give you potatoes, or you give me this and I give you this. No, it is not like that. Now that we are in a modern civilization world, we are using fiat currency. Fiat currency is the paper currency that we're using, and we use that to get things. If I want to go and get myself an iPhone, what I would do is like, I'll give the fiat currency and I'll get the phone, because that fiat currency has a government legal value. So we're using that. Okay. Previously, this was only reserved for a very big finance institution or a wealthy people, because there was not leverage concept. But in CFDs, we do have a leverage concept, and that is the reason what has happened is like it has become easy access for all the people. It is easily access to all the public, and everyone can trade. So it is like today itself, if you want to start trading, you can open an account. You don't have to wait in a long queue, nothing. You just have to go, you have an internet access, you log in and you open an account, market is open and you can start trading itself. All right. Now we're going to come across, I'm going to talk about a bit of jargons here. So what is a jargon? It's basically a terminology. So when you're trading, what happens is like you will come across this words in your trading platform. I have done this session and I've spoken about it in my previous session. All right. My very first topic about what is Forex was there. Okay. I had already spoken about it. All right. You can, if you have not attended those webinars of mine, then you can also find those links on our YouTube channel. All right, where it is already been shared, so you can look there and you can actually get the details. Now the basic requirements, very simple. If you are a newbie, you don't have to stress so much. There will be few things that you will have to understand. One is the bid price. Now, what is a bid price? Bid price is the price that you can sell it to the dealer. It means you have it and you are selling it to the dealer. That is the bid price. What is an ask price? A price the dealer sells at you. So whatever the dealer is selling to you is the ask price. What is a liquidity? A liquidity is the, a liquidity is the capital required for buying and selling the instrument. Now, as I said initially itself, that the beauty of trading online is like you just not even you just don't wait something to go up. You have an option to do trade even when something is going down. So the words used for that is long and short. Long means you're buying a currency, short means you're selling a currency. What is a pip? Pip is a price and difference. I've given an example here to understand what exactly the pip is. Now in forex currency, if you have a pair, there is always a pair. You cannot trade one single instrument. The instruments are always in pair. So here it is AUD and USD. Okay. Now AUD is what? It's the base currency and USD is the counter currency. Now what is a bid? Bid is you are selling Australian dollar to the dealer. What is ask? You are selling Australian. What you're doing is like the dealer is, you're taking it from the dealer. Okay. Now, what is the pip? Pip is actually the difference after the points. You see the difference after the decimal point, that is called as the pip. Now, what is the value of 1 AUD here? If you want to buy it, what is the value? It is 0.8939 because the dealer is giving you at this price. So this is the price that you want to get it for. Now, let's say if AUD USD price is 0.8939 and if the price goes plus 10 pip. So what will be the price change? You will add 10 pip to your. So I will from 39, it would go to 49. So a movement of 10 pips will give you, change the last two numbers. A movement of 100 pip is equal to what? 1 cent. So from 1 cent, if it goes, how much it would be? It will be 0.9039. If you have a calculator, you can actually do it and you can check the difference and you will get the numbers. Okay, now leverage topic has already been covered. Okay, so the basic topic for today that we're going to discuss is all about live trading. This is just a brief that I'm going to talk about. All right, so what is a leverage? A leverage is a nutshell, amplifies the potential of the gains and the losses. Now, this is very useful. If leveraged used properly, if you are a trader and if you know how to use leverage properly, okay, with very less of capital, you can actually make a lot of profit. As I said, if you're managing a proper risk, then you can actually make a lot of profit. Okay. Plus leverage is what, not everybody has to deposit $100,000 or a $50,000. You can start with a minimum of $5,000, $10,000 account, and you can start trading. At SmartFX, the leverage that we allow is 400:1. Now let's understand how leverage works. All right. So let's say leverage is 400:1. Okay. And if you want to open a position of $1 million, what you need is $2,500 only. Now, what is $2,500? It is the margin required. Now, margin required, there was a specific topic on margin trading, all right, that I had spoken about how to calculate margin required, how to calculate margin level, how to calculate your margin. Everything was shared. My colleague will share the details of the video of the YouTube channel for the margin requirement, because there are certain formulas that needs to be understood that will help you to manage your risk when you are trading. So if you want to have a position of $1 million, what is the minimum margin required? 0.25%, right? So that is $2,500, 25%. Let's say now to open $100 million, $1 million position. So how much capital you will need? If the margin is 2,500, so at least you should have $5,000, because let's say if the market is not in your favor and it goes down, your full amount would be vanished. Similarly, if the market is in your favor and it gives you plus, then your automatically your price, your equity will gain and you will make profit. Now, the very simple thing is like, once you are well versed, okay, what is margin and what is margin level and leverage, if all this concept is clear for you, then comes a question that how do I know? I'm not new to this. How do I know that when do I have to buy or sell? This is the first question that comes to your mind. All right. Now, there are multiple ways, and I have again and again, I'm saying that I've already discussed about it. About there are 3 types of pills, if you have remembered. The fundamental, the sentimental, and the technical analysis is what will help you to understand and judge the market, at what price it is going to, how you can actually buy or sell it. All right. So I've taken an example here. Let's say a very simple example. Let's say if you're using a fundamental market and you want to analyze it, how you're going to do it. Now, few months back, okay, initially start of the month, there was a war between Ukraine and Russia. Okay, now because of this, what has happened, all the global leaders came across and they had put an embargo on Russia, okay, that nothing can be done. Consider Russia is a major export of energy. Okay, Russia is the major export of energy. So if all the global leaders come against Russia and say that no, you cannot do this and you do that, so what do you think? Is Russia going to give energy to other countries? So other countries, when I say, is like European side, it's so cold. They need natural gas. They need energy for the heaters and stuff. So what can you speculate? What comes in your mind? And let's say if you think that the war is going on, what will happen? The oil prices will drastically keep on going. Why? Because the supply has been disturbed. There is a shortage of supply. So at this point of time, what will happen? What do you think can be done? At this point of time, you will go and you will buy oil, or you are going to buy crude oil against USD. Why? Because the prices of oil has already gone up because of the shortage. And that is one of the reasons. This is just one example that I've given here because the scenario has been done. So this is how you can speculate the market in any such scenarios, when there is war happening, or when there is inflation happening, or if there is recession happening. Consider the value of that currency is going to go down, or is it going to go up, if it is easily available in the market, or there is a shortage. At that point of time, it immediately gives you an idea that the value for it has increased for that particular instrument, or it has decreased. Okay. Now, a second example, let's say that US is aggressively, if you see these days, there's a hyperinflation going on, and I've discussed this in my previous topic about the hyperinflation, all right, about the fundamental analysis. That is was the topic that I'd spoken about. So now let's say US is every time whenever there is a data released or there is any kind of interest rate hike up, what happens is like US keep on increasing the interest rate. But at the same time, if you see in Euro, the Eurozone, they're not so aggressive. They're not increasing the interest rate gradually. Like US, let's say from 2% to 4%, from 4% to 6%, from 6%. Euro is not going. So Euro must be like 2, 2.5, 2.75. So they're not that eager. Now, on the other hand, Japan is not even thinking about increasing the rate. It is not at all thinking that they want to do any. So every country will have their own way of handling their rate of interest. They will not follow each other and do things. They have their own way to see the economy of that particular countries. Now, what do we speculate? What do we speculate is like that inflation is going up in US. So it means if it goes up, what will happen? FOMC. What is FOMC? It's the federal, the reserve. They will come and they will hike it aggressively. But Eurobank and Bank of Japan, all right, do not hike aggressively because of the economic reason. So at this point of time, what do you understand? You will buy USD JPY. Why? Because USD value is greater than JPY. The rate of interest for USD is going up and up and up, and JPY is going down and down and down. So it means dollar is strong and yen is weak. Similarly, now Euro USD, what you're going to do, understand the counter currency and the base currency. Here the base currency is USD, so that is the first currency. You are expecting that it is going to go up, so you are going to buy it. Now here the base currency is euro. So when I say euro, it means USD is the counter currency. So USD is the counter currency, means you are again what you are expecting, that euro is not hiking the rate of interest, but dollar is doing it. So what you're saying is like euro is down. So what are we going to do? You're going to short euro. It means you're going to sell euro. So this is another example that how you can speculate the market. So very easy. Once you open an account, once you start trading, once you start reading the rate of interest news and everything, I had already shared the link where you can see Forex Factory is the site where you can actually go and check the data in the calendar when and the interest rate report is going to be shared, when the data is going to be released. So these are the things which you can actually practice, and it is very important also because this gives you an idea about the things happening. Just not enter the market blindly and say that, okay, I've seen the chart and this has happened. No, we are doing something which is globally connected to each other. So you have to understand and then only enter the market. But these are some of the easy examples what I've shared with you all, how you can speculate what to do. Okay, now there are different types of pairs in forex market. Okay, as said, the major pairs are the euro USD. All right, we have the great British pound and your JPP USD. Okay, which is also called as sterling or cable. Then we have the AUD USD, which is Australian currency, is also known as Aussie, and USD. Then we have USD and Japanese yen. Then we have the USD and the Swiss, that is the Swiss franc. Then we have the USD and the loonie, that is the Canadian dollar. Then we have the New Zealand dollar and the USD. Okay, so New Zealand dollar is also known as Kiwi. Now, why they are all major currencies? Now you see something common in here. Everybody is related to USD, 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 USD. So they are all connected to USD. All right, so these currencies, you will see the spread movement is also the spread is not so much, the spreads are low, and there would be a high volume trading in this. a very higher volume. You'll see a lot of people trading in this because the major currencies are these, and you'll see a lot of volatility in the market in these currencies. The second type of pairs are the minor pairs. Now, what are minor pairs? Minor pairs are usually the currency cross currencies, okay, which means it excludes the USD. It doesn't have USD in it. Major currencies has USD. Minor currency, they don't have USD. So for example, Euro JPY, AUD JPY, CHF JPY, these are the examples of the minor currencies. So minor currencies are also called as cross currencies, okay. They are usually not USD based. They have different pip valuation than the normal USD, all right, because they are not commonly traded. Understand, they are not commonly traded, as their spreads are very high. Spreads are very high because the volume in this, the volatility for these kind of trades are are not so much, you know, they lack in the volatility, they lack in the volume. That is the reason the spread is very high. Some of them is like Euro JPY, you will see that there is no volatility, but there are high chances that JPP and JPY will have a very high volatility. Now, the third kind of pairs that we have is the exotic pair. Now, when you go to an hotel or a fine dining hotel, they do ask you, would you like to add some exotic vegetables or some exotic things in your dessert or in your platter? So, what is exotic? Exotic is like, you know, hardly, you know, it's a very fine that you will think whether to trade or not. So, these kind of currencies are associated with what? Developing countries. Now, such as USD, TRY. TRY is the Turkish lira, Thai baht, Malaysian ringgit, Indian rupees. What are these? These are all exotic currencies. They are not frequently. Will you go to a fine restaurant every day? No. Why? Because the food is expensive. They are very expensive, and it is very exotic kind of a food. So you will not prefer to have it every day. Now, exotic currencies are not commonly trading because a lacking of the liquidity causing them to, they have an extremely high spread, more spread than even minor pairs, okay. Plus the movement of these pairs are either extremely high or extremely low, so you cannot judge them, you cannot the predict unless and until you have an accurate and extremely sure about it, then you can do it. Or else the prices for this is played by the government, they float as per the government. So today the government say, okay, let's do this, and the price might extremely go up. Or tomorrow the same government will come and say, no, let's not do this, the prices might drastically fall down. So these prices for, especially for exotic currencies, are very hard to analyze and predict the price movement, all right. So there's a lot of risk involved in exotic currency comparatively to major or cross currencies. All right, so here comes the fun part that I have already spoken about, the brief about what all is needed. Now, if you want to know more elaboration about it, I have spoken about each subject and each topic individually, and you will see this on our YouTube channel. All the links are already mentioned on the chat option, so you can refer them. And see, knowledge is something which is freely available, and this is shared. So you utilize it and use it, all right. So now if you have already registered with us, and if you already have or you are willing to register with us, you can click on this link, all right, and it will take you to this page of a SmartFX. Now you will use an individual account here. You will add on your details, your email ID, choose the country in, add in your number, make sure that you change the code. You will receive the code on your registered mobile number, enter the code, okay, select here and accept it and click on sign. Once you have done that, all right, you will go on the login. You'll receive an email with the credential on your registered email ID, and then you can directly, I will show you how the page works. And you can log in. So once you, okay, what is it? Mm. So let's log in. So this is how the page will look like. All right. Now it will give you an option of live account and demo account. So you can create a demo account, or you can have a live account if you are willing to start trading directly. Please go ahead. As said, a live account trading is a complete different behavioral thing that you will come across, and a demo is, again, it's just a virtual thing. So if you really want to start trading, it is better that start with a live account. So it, because your emotions, your everything, you will analyze is when you have it in a live account rather than in a demo account. All right, then you'll see an options here which is transfer. In transfer, you see the deposit. You can deposit the funds here. If you have booked a profit and if you want to withdraw the money, there's an option of withdraw the fund. You can click here and you can withdraw the fund. All right, so this is the basic about this page. This page is basically utilized once you have an account with us. So my colleague has already shared the link with you where you can register the account. Okay, after that is done, you can log out from here, right? And then you go to our website. Okay, so once you go to smartfx.com, now if you're using a desktop, I will show you how you can download the platform on the MetaTrader 5 on your desktop. If you have a phone, you can just go to the app. Apple has stopped it, but Android, yes, you can go to Google Pay and you can download it. All right. Now here you see the option of, if you're using an iPhone, no worries, you can use a web terminal and you can use it on your iPhone. All right. But for a desktop, if you would like to use it, you go extremely down and you see this option of download empty file. So once you download it, it will give you an option, and when you do that, all right, just escape, you will have it something like this on your MetaTrader 5 with smart securities. Once you are there, click on it and it will be open. Now, once you have opened your live account or your demo account, you will get the credentials on your email ID, your registered email ID that you have done with us. So now the first thing that you do is like you will go, because I'm already logged in. So what you will do is like you will go on file, you will go to open an account. All right, you will choose the broker, that is the Smart Securities and the Commodities Limited. If it is not mentioned here, just go in the search option, find the company, select it, click next. Now click, you will already, since you've already created the account on our website, all right, you have received the credentials. Go add in your login details, your password, choose if it's a demo account or it's a real account, and click on the finish button. Once that is done, you are logged in, and this is the page that you are going to come across. Okay, now on the left hand side, what you see here is the market watch. Now if you don't have a market watch, you can go in view. There is an option of market watch, you just click on it and you will get market watch. Now what is market watch? Market watch will give you exactly all the details about the currencies that you want to trade in, commodities that you want to trade in, or indices that you want to trade in, or stocks that you want to trade in. So at SmartFX, we have approximately more than 2,000 instruments that you can actually trade in. All right. So if you want to add specific currency, let's say Euro USD, so you're going to add Euro USD. So you see here, just double click it and you will see Euro USD is being added here. Now you don't want US oil and you want to remove it, just click on it, hide, and it is gone. Sorry, I did hide all. You can just join. All right. So now let's say that you want to see a chart. So you go on the specific currency and click on the chart window. All right. This is the chart window here, and you will see the graphs, some kind of uh, lines, or this kind of pattern is known as a Japanese candle. However, yes, I'm going to come up with some technical um, topics also, where uh, will be easy for you to analyze how does this work. But today we are short on time, so I'm just going to take and make you understand how the live account work and how you can trade. Now on the upper hand side, you see this H1 next to the pair. Now this is XAUD. Now if you want to see USD JPY, again you will go there. You can change the chart window, and here it is. You see the chart has changed. Now this is USD JPY chart. All right. So make sure that whatever you're trading in, and if you're doing it, you can change it from here. So now let's do gold. Okay. Now up on the upper hand side, you see here, you click here H1. H1 indicates that the chart is showing you an hourly things happening in the market. Now you can change this, just double click it. Okay, right click it. You will see an option of time frames. Now it will give you an option of what time frame do you want to choose. So if you're basically trading, the best time frame is 15 minutes and 30 minutes. So you can see, because it will give you an proper analysis in which direction the market is going, so you can place your trade. Now how do we go and place our trade? So you are going to go click here on the option of XAU USD, right click it. It will give you an option of new order. Okay. Now you will see that here you will see the ask price and the bid price. All right. Now, what are you thinking and what is your assumptions towards market? Whether towards gold, it's going to go up or it's going to go down. All right. So let's say, for instance, you think that market is going to go up. So this is the market execution price that you're going to do. As you are a newbie, make sure that you only use 0.01 unit to trade. Okay, managing your risk. And at market execution, you're thinking it is going to go up, and what you do is like you place an order of buy. Now bottom you will see that your balance is $10,000 0.10 USD already here. Now let's see what happens if I place a buy order. Okay, so it says that I have already bought. Okay, so now you see up XAU USD, the order has been placed, and here when you see this, you see the price movement. Because the market is open, you will see the price moving up. Now, if I want to close it on the graph also, you'll see that it is going up, 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 up. Now, just in case, if you want to change this and if you just want to close it, okay, what you can do is like you can also book your profit immediately. Now there is, you just click here, double click here on that option, and it will give you an option down here, close your 0.01 XAU USD. Now what is XAU? There are symbols for every currency. So XAU USD indicates XAU is the gold price. So what it is saying that would you like to close it at this price? So I will say yes, and I will close it at the market price. So now closed. So my sell order has been executed. Now you see I don't have any pending orders here. Now if you see, my balance was 10,000.10. Now it is 10,000.96. Why 96? It means that I have booked a profit of 86 cents, right? So that is how I have made the profit. So I have closed my price. Now, similarly, there are other options. This is at the market price. The execution was done at a market price. So whatever the price is going on, the trade is going to hit at that price. Now, let's say you don't want the market to place an order at a given price. Okay, now there are options like pending orders. Now in pending orders, we have buy limit, sell limit, buy stop, sell stop. Also these I have, in brief, I have already covered in my previous sessions. All right, so make sure that refer to those links and use them, because this will help you to understand why these buy limit, sell limit, what is it used for. So let's say if you want to place a buy limit order. Now buy limit order is what? Is basically, now you see this is your price, which is, this is your price. This is the order price that you're going to place at. Now order placed below the price and price goes up, that is your buy limit. So you can place a buy limit order here. What is a sell limit? Sell limit order would be an order placed above the price and the price then goes down. So let's place a sell order this time. All right, that now you're thinking that it is going to go down. So we'll place a sell limit order. So let's say sell limit order. And so the current price is so much, so much, so much. Okay, the other thing is your stop loss. Okay, let's do before coming to this, let's place a market execution order only. Okay, hold on. So point. Okay. Now there are two options here, that is stop loss and take profit. All right. Now you think that the market of gold is still further going to go up, and you want to place a market execution price. So what you'll do is you will put a stop loss. Stop loss is like you're going to minimize your risk. So at once the price executes or hits there, your order will automatically close. So now if you're buying at current price is 1752, and if you've kept a stop loss of 1751, what will happen if it hits? Then your order will automatically close at a loss of 1.51. Okay, at $1. Similarly, if you have put a take profit and if it hits take profit, so let's say you placed an order at 1752 and it goes to 1753. So once it hits 1753, what will happen? The order will automatically be closed. So the order will be closed and profit of $1 will be executed. Now this options helps is like, sometimes you are certain that this things is going to happen and you want to minimize your risk. You don't want to take a chance. So what do you do is like you use stop loss and you take profit. All right. So my friends, understand that this is very important for you if you are a newbie, because you don't want to take extreme risk before getting completely into the market. You have to understand it. So try using stop loss and take profit. Try to book minimum profit, close your order and execute your trades. Okay. Now coming back to the pending order. So as I said that buy limit, what was a buy limit? An order that is placed below the price. So let's say if the price currently is 1751, okay, and this is the price going on. So your limit price would be 1750. So if 1751 is placed and if you put a buy limit, what will happen? So let's place an order. Let's place an order at 1750. Okay, 1750. Okay, so I will just place an order. Okay, so now you see here XAU USD. The order, there is nothing that is showing moving or anything is happening. Why? Because I'm thinking that it is going to come at this point and from here again it is going to go up. So what I have done is like I have placed a pending order. Similarly, it goes for your sell limit also. If you want to place a sell order, you can place it the same way. What will be the sell order? Sell order will be placed above the price, that keeps on going. So sell order will be executed from there. So now order has been placed. If I don't want to continue the order, it seems that it has already gone too much up and you don't want to place the order, what you do is like you can just close the order and it will ask you, do you want to say yes and okay. So you see the order has been gone. So you have nothing on your system as of now. All right. Similarly is your sell limit order. Again, going back to the instrument and again placing an order and understanding what is buy stop and sell stop. All right. So hold on. Now, what is basically buy stop? Buy stop is again your your current price is this, your current price is 1752. Okay. Now, buy stop will only hit the price if it goes up above the market. Okay. So your current price is 1752, but let's say you want to place an order at 1753. So if it hits here, then only your order will be executed. So the buy stop is always above the price. So let's take an option here and put a price of 1753 and place an order. So you see again here, the order has been placed. It is above the price. So until and unless it doesn't reaches here, the order is not going to be executed. The order will be pending. Similarly is for the sell. If it goes below the market, then only the order is going to execute, or else it is not going to execute. Again, if you want to close it, you can just click on write. You can modify or delete. It's in another way. You can do that. All right. And you can delete the order, and the order has been deleted. Okay. Whatever trades that you have done, your balance is seen here, your equity is seen here. Very important, do refer to the trading YouTube webinar, okay, the trading margin trading webinar, because all these things you will understand how the movement happens, what is the plus and minus, though it is done automatically by the system or by the computer, but as an individual it is very important to understand that this is very important how the calculation works, so that you don't have extreme trades in your account, or you don't have extreme risk. So you know what you're doing, and your margin, free margin, is okay to place an order. All right. Now whatever trade you have done, you can see here. All right, the trade history, it will show you in the history option. And here it is, it will show you the amount of profit given and share. Okay, so I've already shown you how to do it. Now you don't have to log out, you can just close it and it is done. So, yes, it is already 7 and the session has been too long. So now without wasting our time further, let's have a one-on-one session, okay, where if you have any query or doubts, all right, I'm sorry, hold on. If you have any queries or doubts, please feel free to ask me. So the right hand side, you see the option there, okay. Okay, so just please is saying hi, just please. All right. So guys, any doubts or any questions, please feel free to go in the chat option and let me know, please, so that I can answer it. I hope the session was helpful and you all at least understood how does a trading platform works. So just please know, we at SmartFX, we're providing MT5 platform. All right. That is what we have, my friend. MT5 is good, accurate. You see the price accuracy is very good at MT5. So currently it's SmartFX, we have MT5 platform that we're providing. No, who said the spread is high in MT5? It doesn't matter if it is MT4 or MT5. See, what is MT4 and MT5? MT4 and MT5 is just an application. It is just an application. How do you have an application for Talabat? How do you have an application for Donata or for any Zara, any brand? It's just an application. Then there are brokers who take it and we give it. So it is a put. The spread is decided by the volume. It is decided with the volume of the trading, not with the platform. It has nothing to do with the platform. It's a wrong concept that you have in your mind. I hope that is answered. Great. So guys, shoot out more questions if you have anything. My pleasure. Also, my colleague has also mentioned the details about the office. We are in Business Bay. As said that, We are here from last 8 years, and if at any point of time, if you feel like having and sitting and having a cup of coffee, please visit our office. We'll be glad to have a cup of coffee with you. So if currently if you're using any, if you're already a trader and if you're already using or familiar, or you don't know how to use, using a MetaTrader 5 on a mobile is much more easier, but the access is limited. However, on a desktop, you have a wide screen and you can check all the details. You have an options of indicators properly, which is visible. You can use it. Once you start trading over, gradually you will understand how to use the indicators. And as said and promised that yes, surely I'm going to come up with a few of technical indicators which will help the newbies to better understand the market. Charity, yes, my pleasure. I hope it is understood. Great. Also, I would like to, since we are, we have already educated more than 1,000 attendees with our webinars. So there's a one step ahead that we're taking ahead, that we want more of people to get educated, and we see that people come out from different backgrounds. When I say like different culture, so we are taking an initiative, and we're soon going to conduct a webinar in a different language, that is Malayalam, okay, and gradually in Hindi as well and in Arabic as well, so that all the people understand, especially the newbies, and it becomes easy for you to understand how it works. All right. So that is one great news that I wanted to share with you all. Any more question, guys? Strategy related session, Krunal. Yes, I will definitely share soon. All right. Okay. But currently, what we're looking out is like we have come across a lot of newbies who wanted us to see every decision taken is as per the requirement of our clients, and we are doing that. So, yes, but inshallah, soon we're going to have a strategy related session also. All right. I hope that has answered Kunal. Preeti, I have understood, ma'am. Okay, great, Preeti. And I hope that you start your account soon and start trading with risk management, obviously. Auto trading. Auto trading, we don't promote that, okay. And again, as said, that robotic trading is something that I personally don't prefer it also, because you don't know what you're doing. If let's say the market is not in your favor, and if you've just put an order, and you don't know it will work as per the robot. There are chances that your account might liquidate, but if you're doing it by yourself, you have access to it, you can hold it. And plus robot does what a human is placing something and it is being done. So we don't encourage, SmartFX don't encourage robot auto trading. All right. The best person to analyze trade is yourself, your own study. Again and again, I keep on saying that, even if you have got a signal from somebody, make sure that you analyze it by yourself. Is it worth doing it? Just don't jump in the market and do it, because your behavioral pattern, your strategy pattern would be completely different to that person. You don't know what are his plans towards that trade. You've just listened a part of it, that just do this. No. Okay. So as said that, we have more than 2,000 instruments that we provide. We have stock, we have indices. Yes, we do have some of Indian stocks. Yes. Um, that we have on a market. Yes, we do have it. So we have HDFC. What you can do is like, we have Wipro. You can actually have a demo account and you can check the stock options, or you can actually have a real account and you can look at them. Great. Oh, well, I like your name. Just please. All right, so the link is being shared, and you can register here and you can get the details. All right, great. Any more question, guys? I understand it's a weekend, it's a long webinar session today because obviously I'm sure that people are eagerly waiting to get another passive income and earn something more apart from the salary, okay, in a proper way by learning and by understanding with our risk management. And of course, we are there to guide you and assist you at SmartFX. So definitely for anything, please connect with us. Let us know if there is anything. All right. So I think most of the question has been answered, almost all, I believe. All right. So let's end the session here and have a lovely weekend ahead and take care of yourself and your family. Till then, good night and bye.